G'day, welcome to episode 99. Last time we'll be in double digits, and our last one for 2025. Welcome, and we've got the the A team's back. No one's on a boat this week. No one's on holidays or whatever. We've got the full team here for the last Bulls versus Bears for 2025. Welcome, Jonathan and Kai, the Brains Trust.
Yeah, no, nice to see everyone. It's actually too hot to be on the boat today. It's like 40 degrees outside in Sydney. So yeah, let's chat markets instead.
It's nice for some. Yeah. And Kai, mate, we obviously welcome aboard as the trio. It's been an interesting old week. The title this week is Central Bank Divergence and Choose Your Own Economic Data, as we'll get into with the inflation data, which was a categorical joke overnight. Sorry, I put that slide in the wrong area, but we'll come back to that in a little bit later. But look, pretty quiet equity front. And I mean, the US has sort of recovered a little bit last night, I'm not sure what happened to the Nikkei after the Bank of Japan today, JT.
So BOJ came out, actually raised rates, so they're at 0.75, but the market's taking it as quite dovish. So even though they've raised rates, the Nikkei was actually bouncing into it and actually rallied a little bit after it. Obviously, the bond yields have all risen there, so the 10 years are at 2 flat. The long end's broken out to new highs, I think 336. So obviously, debt's getting more expensive. Or cost of funding is getting more expensive in Japan, but the equity market has taken it in its stride. And as you see there, all of the indices were actually quite negative. Like if you take away yesterday's move higher, which was fueled by the actual Bank of England cutting rates last night. It was looking kind of grim, but it looks like the markets are trying to find some sort of footing here, and maybe we could see some sort of a bounce into Christmas or some sort of some reprieve by Santa. But overall, I just still think they're the two forces at play, and I've talked to my clients about this. So I think for 2026, my two main things is, as always, I'm always looking at the fund flows. So looking at the ETF data on how much money is going into these ETFs versus the cost of funding, and just those bond yields keep rising. So they're my two main things.
Yeah, Kai, what about yourself? What are you? I know you were pretty keen on quantum, and we're obviously wrapping up a bit of a structured products campaign and enhanced growth campaign and things, but what are you looking out for in 2026?
Again, I think the play is that, you get on board on that initial rally of optimism where they come out with the technology and they go, okay, this is the next big thing. However, I think, the caveat is I do think it is still a couple of years away from true commercialization where AI is now. Maybe we're looking at 3-4 years. But I do think if it comes out with something revolutionary within the next year, it could definitely go on a big rate. So exciting. It's definitely a good basket that we'll come up with in the next couple weeks. It's exciting build.
Yeah, look, I mean, I got to say, when I started writing that outlook, I was like, I'm out of ideas, and that's doing more research usually begets usually begets more ideas, basically. And I tend to agree. Quantum, like when it goes, it'll go, and it's going to cause a lot of disruption. I'm not entirely sure, how good it's going to be for some sectors, like encryption and things like that. But look, I think the critical mineral stuff. If you'd asked me 3 months ago when everything was at stupid highs and Trump was, I think that they're all pulled back now. Like antimony and MP materials, all those, they're back below where we bought them, and I think they went 200% from, or more in some cases, up to the upside. I think that'll start to play out a little bit. I think the refiners will probably do the best, and I've only been waiting since like 2021 for copper to rally and silver and platinum. Silver and platinum's doing their job. They're up 100% this year. I think they'll do another 100% each next year. I think platinum will get above 4,000, and I believe silver. At one stage, there'll be a really dumb silver move, and it'll probably come back to the pack a little bit. And I think gold will just chug along, but it won't steal the headlines like it did. Like it did previously. So yeah. But I think it's definitely not going to be a linear year. I think there's some bumps ahead because, I mean, we've just gone ballistic in terms of how much we've priced in. And then I honestly think there's going to be a serious credit problem this year. Like we got margin leverage is just for everybody is just through the roof, including companies. And you've even started to see the hyperscalers, like they're supposed to be cashed up. They're now starting to issue bonds and stuff. I think there at some stage there'll be a very scary moment, and it won't be like the April move where it bounces straight out. But as much as Trump will try to do it, then I think we'll rally really nicely into the back end of the year, and those thematics aren't going to go away. But yeah, I think there'll be a scare. It'd be like when you get your car sideways or your aquaplane, and there's that moment where your heart goes, "Oh, I'm going to die," and then you don't actually die. So there'll be, and there's always the Fed, which is to double down on my stupid analogy. It's like the airbag of the stock market. You might break a nose, but you're not gonna smash your face into the steering wheel anymore because they just cut rates. So yeah, it'll be interesting. But I will like. They're starting to roll over a little bit, those technicals as well, which is a bit concerning. JT, yeah, this was the week in the Aussie market.
Yeah, so week in the Aussie, I think the main couple of things were Treasury Wines got belted on their outlook. Boss Energy as well got hit. The banks look like they're all trying to bottom out here as well. So interesting that the Commonwealth Bank was looking positive here, and basically I'm worried about cheap funding continuing, but the banks are sort of hit their lows, and a lot of the consumer discretionary stocks like it doesn't show it on this move here, but things like a JB Hi-Fi, they've all bounced off their lows. I wouldn't say they formed the bottom, but the fall over the last few weeks into Christmas was a little bit concerning. So yeah, a bit of a mix.
It hasn't been the best performing sector for the year.
Oh, exactly. I mean, like mixed bag all around, but I'll just have to mention my favorite gold and silver. The hits keep coming. I just noticed there's been a few mid-range companies breaking out in the gold sector. So, as an example, Southern Cross Gold, which I do have some of my guys in, that's broken out to new highs today. And things like Greatland breaking out. So there's still plenty of life and in that space. So I think, and I've said this on Ausbiz, I still think that long gold and silver is still one of the easier trades going into next year, because I just don't think that debt problem is going to get fixed anytime soon. So money will keep pouring into that space, and I think it just chugs on higher. I mean, like I think, as you said, there'll be some silly moves where there'll be some silly profit taking or even some crazy short squeezes. But just in general, I think we'll, at the end of 2026, we'll be going, I wish I should have just held on to my gold and silver, because it's much higher than where it was at the start of the year.
Well, the gold miners particularly, they're just going to print money.
Yeah,
So it,
and I think you
it's
mentioned it
not
on
really
the yeah, I think you mentioned it on the call. Like even if just gold goes sideways, it's not like their ASICs are increasing here, and the markets haven't priced in the extra profits that these miners are making with gold at 4,300 and silver at $66.
Yeah, so I mean, look, it's a US dollar story. Let's face it.
Mm-hmm.
And when the reserve currency of the world decides to literally grind itself into being toilet paper, I would go as far as to say, toilet paper might be worth more than the US dollar by the end of the next year. So,
Well, during COVID it was.
absolutely it was. So, but look, I did a little cheats thing here. This is for the whole year, the market map.
Uh-huh.
So look, we've been on gold all year. You can obviously see CBA. These guys made a bit of recovery in the banks, but the material sector's really carried. But the material sector was the second worst performing sector last year. Energy was the worst last year, and it'll go damn close to being the worst again this year. Healthcare has been a shocker, but that's partly to do with CSL. But I think WiseTech has really held down the tech stocks here in Australia, and look, there's pretty clear here what's going on.
Well, I think especially here in Australia, it's been a tale of two halves. Like the banks pretty much carried the index in that first half of the year. Then once CBA got to near 200, it just got sold off, and then that was when the materials just took over, and they've definitely finished the year strong.
Well, and this surprises me. Like Macquarie Goodman Group's the best data center provider in Australia, and we've had a year of data centers, and it's been hit. So I mean, I think we've done quite well this year out of being in those things that were not particularly performing well last year. It could be a case of the same sort of thing potentially, whereby Macquarie in itself is. If it just, I don't know what the concerns are around it, but the banks in the US have done very well. That's this week. Obviously your one's the one you cut and paste. JT's, only shows the biggest stocks, but I mean, these guys got a bit belted. But I did the yearly as well here. And look, there you go. Like the banking sector over there has killed it.
Yeah.
As you can see, JP Morgan up 30, Goldman's up 50, Citigroup up 60. Like, and that's surprising. Amazon's only up 2, I've got to say. But again, and Nvidia's only 30. Apple, for whatever reason, God knows how that's up. So yeah, that brings a lot of things into context over the course of the year. The healthcare sector really did rebound. It was in more trouble than Skippy in a bushfire in the middle of the year. So, but yeah, Palantir would probably be. I think Newmont is up 161, and I believe that Robinhood, and I can't find Robinhood on the map. I'm trying my best. It was the leader, but it's between them and Newmont, which were the two best for the course of the year. So. And yeah, so but yeah, well, it'll be interesting to see what happens next year, I suppose. There's no major surprises there. Maybe there's Micron up 192%, so that would have, and that's rallied the last few days.
It's been a massive year for the memory chips. They're like
massive.
SanDisk, Western Digital, all those guys. Oh my god, it's just crazy.
And even Intel's managed to be up 80%, and that's like the every chip company's retarded cousin. So it's only been supported because Trump's basically plowed some money into a useless stock. Oh, there's Robinhood. It's up 200%. So there's been a few mad winners.
Yeah, and you'll like this, guards. So in the memory chips, apparently there's a few milligrams of silver in each one. So that's where that's.
Mate, I've been quoting increased industrial use forever. You can't have solar without silver.
That's it.
Yeah, no, I think we'll see triple digits for silver at by middle of next year. But we'll see. But United Health as well. I mean, I think the healthcare sector there's definitely there's a lot of concerns around it, but there's definitely pockets of value there, I would imagine. But I think you probably have to be a little bit wary buying stuff that's up, that doesn't have a very firm thematic that's up more than 100% for the year. Robinhood will be an absolute disaster if that margin debt thing ends up collapsing. So, yeah, it's definitely one I wouldn't buy. All right, guys. So hang on. So one stock on this market map that you would sell and one that you would buy for next year. I'm putting you on the spot here. I've literally just come up with this off the top of my head now. I'm now regretting it because I've got to do it myself as well. But you guys go first.
Well, my buy is Newmont, and I would sell. Oh, jeez.
Well, we can come back to you, Kai.
Okay,
What's your buy?
I think Tesla's just going to continue to rock it up next year. So that's my
Damn you!
buy.
You stole mine. Bastard. Yeah, no, I agree. I think Tesla as well, but I'm gonna. But because you've stolen it, I'm gonna have to choose something else. But
look, can I just say, I don't know which one it is, but what's the biggest home builder on the S&P 500? I'll sell that.
Yeah,
So
probably.
I'll have to Google it.
Yeah.
Okay.
I mean, it'll be way too small. I've got to say. I'm going to go my sell. Which unfortunately, if you could choose private companies, it'll be OpenAI. I think that is absolutely going to be the catalyst that unravels the AI thematic. And then it'll die, and then everyone will just get on with the job, and that's where the bounce will be. I think he's, to quote Top Gun, his body's writing, his ego's writing checks that his body can't cash. And I think that is any sort of ripple in the market is going to end up being an absolute disaster. So I suppose, in terms of selling, that's definitely one. I don't really want to pick on Oracle, but I think that'll end up having a bit of it'll come a cropper. I think Robinhood. I think it'll get hit at some stage. The best performer, it's way overpriced, and I think that the margin, if there is a massive margin lending thing, everything's interrelated on those platforms. I think it causes a cataclysmic retail blow up, basically, and which the instos won't care about. They'll just be sitting on the bid going, our time frame's 5 years. But I do like Tesla, but I think this will be the year of someone's going to monetize AI, like someone like ServiceNow or Salesforce. I think and do quite well. So I'll go Salesforce next year. Just to be different, but I definitely reckon Tesla's going to have an absolute gala overall. So,
I Googled it, and so the biggest home builder that I can see is the NAR. So I'll sell that. So basically, I'm long gold, short houses.
Long gold, short houses. Yep.
Yep.
Okay. They reckon that the housing market might free up a little bit when if rates come down, because everyone who's got those locked in lower rates will actually be able to move.
Yeah, that's if the bond markets let lower home rates go.
Let it move. Yeah,
exactly. So I don't think that happens, and that's why that's
fair enough.
That's my pairs trade.
So this is the inflation data from last night. This is the reason we rallied. So this is inflation month on month for all the year, and then all of a sudden, bang, it just goes down for 2 months. Increasing all year, and then bang, down for 2 months. So what's basically happened here, and there was a great thread on x.com. So there's seasonally adjusted changes from the preceding month, which have been around forever, and they're normally anywhere from, you can go from anywhere from 0.8 to 0.2. every single month in seasonal adjusted, and December and March being the highest too generally. So they just decided not to do any of the seasonally adjusted numbers, and wait for it. It's stuff you'd never think of that you would never use, like food, energy, clothing, and shelter. So all the things that you literally have to use on a daily basis that are either on you, above you, or are powering your phone. What people would regard as, if you were the essentials, the absolute necessities. As you can see here, with my beautiful crafted circle, is that they just didn't bother to add those in this time around. But
we joke about some of the, marking your own homework type situations here, but this
is beyond marking your own homework. This is doing a test.
Yeah,
this is doing a test and going, yeah, we won't count that answer because I got that one wrong. We'll only count. So so apparently we're at 2.6%. So I've been harping along with my tinfoil hat on. It's not a tinfoil hat anymore. I can take my tinfoil hat off because I was freaking right, and he's just put a patsy into the Bureau of Labour and Statistics, and all of the S&P 500 have shoved through their layoffs in that October period. No one even realises we had a down 105,000 payrolls number, and that unemployment rate's gone from 4.3 to 4.6. And it's been like, I keep up with this stuff and do the morning report every day. They just release it. They just released it. Like, this one was expected, but employment was just like, oh yeah, we're doing it. We're releasing it today. Like, it wasn't on any calendar. And then they're just gone, yours? Oh, okay, yeah. There's payrolls. And the sample size is ridiculous. So I still think there could be stagflation next year, but whether it is recorded stagflation or whether it's actual in the real economy stagflation is a different thing, because it appears as though the Bureau of Labour and Statistics is now the Bureau of Choose Your Own Statistics to get more rate cuts. So,
can I just say something? So based on that number that you've been harping on about, the inflation rate in Japan is higher than in the US now.
Oh wow! That's. I mean,
yeah, but like you're comparing apples to wrong, not even oranges.
Apples to a Volkswagen.
Yeah, exactly.
Very different. This is and this was because I added this in as we were talking before, but so this is the credit default swap on Oracle's debt. It's now higher than the GFC. So so you're paying away 140 basis points to insure your debt with Oracle now, and people are scrambling for it pretty badly. And Kai, you explain what a credit default swap is to everyone.
Yeah, I mean, the CDS basically just measures the risk of basically that credit instrument falling. So obviously, as the basis widens and increases, there's higher risk. So it's not looking good on that chart.
No, so this is what Michael Burry bought, for instance. Say ignore the fact that it was Oracle, and replace it with mortgage-backed securities. So it normally just bumps along the bottom here, and you're paying away next to nothing. It's it's insurance, like in case the house burns down, and he was buying credit default swaps on mortgage-backed securities back in the day, and then that was what he made all of his money out of. That I'm not saying back to 2009, 2007 sort of area. He made it. Basically, he was betting that they were going to default. And that the value of his insurance would go up, and that's what these people are doing as well. They're worried that Oracle might default, so there is concerns there, but you can sort of see what the market reaction is. But commodities and FX, platinum, old silver had one whole week of being the bride, and it's back to being the bridesmaid.
Yep, 15-year highs for platinum. So I had to zoom out on the monthly chart to see where it's been. It's obviously been a lot higher. But yeah, massive move on platinum. Palladium also broke out as well. Like, that's not on the chart, but it looks like basically as we say, money's just going into real assets, and it's just it was moving into gold at the beginning. Now it's moving into silver, and now just down the chain as well. So yeah, like just massive moves on anything that's a store of value.
Yeah, and I'm just trying to get us a platinum chart here. But gold back in the gold used to be back in the mid-90s was cheaper than
it was like a quarter. I remember when platinum was 1,200 and gold was 300 when I first started looking at these things, and obviously that's swapped over now. Platinum's 1,500 and gold's at nearly 44. So three times. So yeah, big move and in terms of relative values there. But overall, massive move for platinum for the week.
So what I'm going to do now is I'm going to show, because we can do this on the fly a little bit now these days, is the platinum chart versus gold, and then the blue line, which I'm going to show you is what gold, and it goes back to when I started in markets. So that's back to 1996. So gold bumped along and platinum was worth heaps more. Mm-hmm. And then somewhere around 2015 or probably 2019, gold just went ballistic. And I suppose I reckon if you put up Chinese holdings of US treasuries, that would be when US treasuries started to decline.
So around 2014, they stopped buying extra. So
yeah, right, there you go. So then they've gone into gold. But I mean, so look, for all the people out there that go, oh, look, platinum, it can't double next year. I think double is conservative. I think it can easily go on a run and do 2 or 3 times. But yeah, and our old mate Bitcoin down 8% for the week, but it's apparently a risk asset at the moment. It's not a store of value. We'll get back to you on when that changes. So. Digital. It's not too many digital gold quotes floating around, I've got to say. And uranium's just pulled back a little bit, but it's been a pretty boring week. Well, we're back. We drifted back into fear territory.
Yeah.
I suppose we did have. Apologies, folks. I had to move house this week. I didn't really focus. I wasn't here for when it was down this week. I didn't get to enjoy it. But I only came back for the bounce. But yeah, no, fear at 44. I mean, is there any clear signals from this, JT, that you're seeing? Is there nothing major?
Well, I mean, like from what I've been noticing over the last few weeks is that S&P's at near record highs, but there was no exuberance at all. So for some reason, the way I see it, everyone is leveraged long. And everyone was expecting Santa to come in, and Santa hasn't appeared just yet. I mean, we still got a few more days left. But you look at that level of margin debt and margin loans on equities, the amount of 2 times, 3 times ETFs out there, 0 DTE options. Like everyone's just expecting this market to head on higher, and it hasn't. Done it yet, and that's why the sentiment is still quite low. So that's kind of a tell that I see in the markets at the moment. Oops.
I think you're right, JT.
I sort of lost. We lost you a little bit there.
Yeah, I mean, but either way, so I
think you're right. I think in terms of where the market stands at the moment, it's had such a massive rally since that Trump April 4. I think most of us were quite surprised how hard it did bounce out of it. So I'm not surprised that it's taking a bit of a breather over Christmas. I mean, Santa had to pour more fuel on that, but I just don't think there's everyone who wants to buy has.
Well, we didn't have the October pullback.
No, we didn't. No.
So normally we have the October pullback, which fuels the Santa rally. So if you don't have the seasonal weakness in September, October, it's sort of already there, right? So, yeah, but I mean, a pretty short one this week. Look, we're going to have to. So our first episode back will be our 100th episode. And I would imagine we're going to be back on Friday, the 9th of January. So realistically, this is a 20-odd-day call, at least a 21-day call. I'm going to write it down because there's going to be extra points for getting it right. And I might even, we might have to formalise the bear. How many star bears you are by how much percentage would be down.
Let's collect data for next year.
Next year we'll keep a scoreboard next year. Look, to be honest, we were surprised that anyone was listening to us at all. So we didn't really feel the need last year, but we're starting to, people. We've been very surprised that people are tuning in to, two old blokes talk about markets. So JT, where on the 9th of January, where do you think we're going to be?
I think it'll be fairly flat, but I think the S&P is 2% lower. So is that a 2-star bear?
I don't know. We'll just go 2% lower.
Okay.
And we'll have to find the I'll have to find the S&P price too. But what about you, Kai? What's
Same place, flat.
you reckon we're gonna be flat? So you're gonna go. So it's 67.75 right now, and that's cash. So and you're saying basically flat. I think it's going to be a little bit illiquid over Christmas, and I think that illiquidity is going to cost the market, and I reckon we're going to be down about. I reckon we could be down 6.5% by the time we get back in January.
Yeah, that's fair enough.
If not, and that, look, I mean, we'd still be 6% from record highs. Like, it's not really a big deal. Like, it's not. I'm not going out on a limb, but 3 weeks. I think you can just give away a couple of percent a week, and people will come back and go, "Oh, where did that go?" Because there's no earnings, there's no catalyst, and realistically, to have a down week when we've had the best imaginary CPI numbers in history for lowering interest rates, I think they're going to unwind that, particularly when people will start actually having a look into those numbers and go, oh yeah, maybe we aren't cutting rates in January. I'm not entirely sure there's a January meeting either, I've got to say. There's not a January meeting for the RBA. So I'm just going to double check. Yeah, but I think January's central bank gets them off usually, and but yeah, and shout out to it was a really good thread. It's January the 28th. So I mean, it's just ekes it in. So yeah, and we'll double check on that next year, and it'll be a big 100th episode. Kai, I expect you to order the balloons and the cake now, and we'll throw some streamers down. Maybe JT will that little booth that you're in right now, we'll fill it with balloons or whatever. But thanks everyone for listening this year.
Thanks to everyone out there as well, and appreciate the feedback. And keep
the feedback coming, because we're happy to change. We have this. Like, we just want to be interesting, and we want to tell you guys things that you want to know. So just tell us what you want to know. Like within the financial, I'm not going to help you with medical issues or anything like that. But unless it relates to a biotech stock tip, but I think we'll just keep the feedback coming, and like and subscribe. I finally got it in. You've been asking me to say that for 99 episodes it's taken. Make sure you follow us, because apparently that's great for our social media.
Happy New Year to everyone out there.
Happy New Year and Christmas and Merry Christmas, and and we will chat again next year.
You guys.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.